we're in a weird time right now. I think we are, and I'm looking for you to break out your crystal ball in a way, but also just kind of give your opinion based on your just historical kind of views, in the sense of money's really loose out there right now. You know, a lot of people get money. There's you as a lender have a lot of competition with a lot of different loan products. What would have to happen, like, for things to start tightening up again, or what things in the world would have to happen for money not to be as loose, I guess?
Well, I think that, you know, as we go forward in the future, if we see much more inflation than we've seen in the last 10 or 20 years, if inflation continues to build and inflation comes back into the economy again, then you'll naturally see interest rates go up, and probably go up substantially. That I think will slow down a lot of this activity. Right now, and for many years, mortgage interest rates have been at historic lows. You know, and that, what do you mean by that? Well, maybe 30 years ago when rates were, 10 or 12%. And then in recent years, rates have been 4% or lower, let's say. So that's at a historic low. But if in the years ahead, if we see more inflation, then the market will balance that by increasing interest rates all by itself. And that may slow down some of this kind of activity. Certainly there's issues with affordability. I see prices this year as we speak, just gone up substantially on almost any kind of property, in any location. But at the same time, we've also seen rents go up at the same time. So the rents have helped people to qualify for the larger size loans to do all these rehabs on 2, 3, and 4 unit properties that we do. I have a client who closed about a month ago on a 4 unit property. It was in Washington Park, in fact, a property from the late 19th century, a gigantic property, much bigger than a typical 1920s property you'd see in the city. And that's a 4 unit property. His rehab budget was $500,000. They'll all have completely different floor plans. They'll all have at least 2 bathrooms. They'll all have a washer dryer in the unit, their own AC, their own heat. So the budgets can be substantial, but the rents are going to balance that out, because, as I said, we do after renovated projections on the rents as well before we approve the loans, as well as the after renovated value relative to what they're putting into it, what they bought it for. But as long as the rents are still going to stay at the levels they're at, I don't really see that much of a problem. As long as we don't get too much inflation that makes this too unaffordable for people. And I think things like that will continue, because in Chicago, particularly, there's a tremendous amount of housing stock, probably maybe 70% of it, that needs updating and renovating. And lots of older cities around the country are like that. So we see the same thing happening in other cities. Newer trends are the ADUs, building in a nanny suite, an in-law suite, even a cabana, whatever they might call it, on the back of your property. If that becomes something that can be done anywhere in the city, that might help to solve affordable housing, because these will be small units. 4, 5, 6, 700 square feet is about all you can fit on your garage. So they should be a little bit more affordable in terms of renting. So I see some positive trends going on, but what I'm worried about is inflation and then affordability.